What's up, guys? So I hope you guys are having a good Martin Luther King Day. So we have a break off from the markets. The markets closed in the United States on Monday in observance of Martin Luther King Day. So I thought I'd just be talking about Netflix stock. But before I get right into it, I want you guys to smash the subscribe button, give me a thumbs up if you enjoyed this content. So Netflix is reporting earnings on Tuesday the 21st after the market close. So a lot of things to talk about Netflix and where we're going and heading after they report their Q4 2019 numbers. So first of all, guys, there's been a lot of negativity surrounding Netflix. People have been talking about the competition between Netflix and Disney and Apple and all these things. So I just wanted to kind of just show you guys what the stock price has been doing over the last year. So while a lot of stocks have been way up, actually Netflix took a pretty big hit in July. It was trading at around $380, and then it came all the way down to 200 and around $260, something like that, after they missed their quarterly subscribers numbers. They had in that second quarter, they actually had a drop in subscribers. So that was the first time ever that Netflix had a drop in subscribers. And then in Q3, they also missed their numbers as well, but they added a bunch more subscribers. So really, that was pretty much the reason for that huge price drop. And I actually have been watching Netflix for a long time. I wanted to buy the stock, but I just really never had a chance to get in. So I bought in right around here. I didn't buy at the bottom, unfortunately, but I bought it in around the 280 $280 mark. So I'm up quite a bit. But what's really important to me is the long-term growth of Netflix. So a lot of people are talking about all the company is going down and the growth isn't there. But I think that's just BS, because let's just take a look at some real facts here. So Netflix was, if you take a look at this article, Netflix was the best performing stock of the decade, delivering a more than 4,000% return. So Netflix was by far the best performing S&P 500 during the last decade. Netflix joined the S&P 500 in 2010. So here we go. Reed Hastings. This guy was basically the best CEO over the last 10 years. So back in 2010, Netflix only had about 12 million subscribers, and now the company has a lot more than that. I believe the company has about 156 million subscribers. I can give you guys an exact number here, but I believe the subscriber count is at about, I want to show you guys this article earlier, but I just want, okay, so according to USA Today, the company reported more than 158 million accounts and expect to close out the year with about 166 million. Okay, so that's a massive growth there. So they started with 12 million subscribers, now they have over 150 million subscribers. And as you can see here, this was the top performer of the last decade. So let's just cut a lot of the BS right now. We know that Reed Hastings is an excellent CEO, but most importantly, we know that all the people working for Netflix, everyone from the CEO down to the board of directors, down to the filmmakers, the writers, the actors, everyone involved with Netflix is excellent. It's an excellent run company, and the stock is up so much for a reason. A 4,000% return is just absolutely ridiculous. And kudos to just the product they deliver, and that a lot of the people that use Netflix are absolutely loyal to the company. And I just don't believe that Disney and Apple are major competition. I believe people are going to be using streaming subscriptions, just like they use subscriptions to a magazine or a newspaper. I'll give you guys a real good example of a story. When I was much younger, I was a teenager, I used to work for this lobbyist in Washington, D.C., and every morning, I would go buy his papers, and he would buy like 4 papers. He would buy the Washington Post, the Wall Street Journal, the USA Today, and the Washington Times. So when someone is consuming a lot of content, it's very rare they're just going to consume one paper or one streaming, network. Or could you imagine only watching one cable TV channel? No, we're going to watch many different channels. So the thing with Netflix is that all of these companies are going to benefit from the switch from the cord cutters from cable moving to streaming. So I don't think you have to worry about that. And based on Netflix's past history, obviously past history is not indicative of future results, but I'm not worried about Reed Hastings. As long as Reed Hastings is running Netflix, I think we're good. So Obviously, the company is much bigger than they were back then, but I think this is a really nice opportunity to get in on the stock, because if they impress with these numbers, it could break out. So let's just read some of the good things I've been reading here. So going back to this USA Today article, how Netflix can double their subscribers by 2025. So what people have been kind of complaining about is that the national growth has slowed down. But what the biggest potential for Netflix is the international growth. So as we see here, according to Devitt's estimates, Netflix has reached 55% penetration rate in North America and 39% in Latin America. But there's a massive opportunity in the emerging markets, Asia, Africa, and other parts of the world. So what this is telling me is that basically, I think it's a little bit nearsighted to expect most of Netflix's money to come from the United States and Canada. Most of the growth is going to come from places like Asia, Africa, and Latin America. Because, let's be honest here, a lot of these countries are emerging countries. The internet isn't as fast as it is in North America. A lot of the people are joining the middle class. There are going to be way more people joining the middle class in the emerging markets in the next 10 years than in the previous 10 years. Because when you travel to other countries, you notice that most of these emerging countries are about 10 to 15 years behind places like, London, United States, stuff like that. So in this next 10 years, you're going to see a massive adoption of Netflix. And just because the people just have faster internet connections and they're just more aware of the content that's available for them. But one of the things that I really like about Netflix is the fact that they release foreign content. So it says Devitt estimates that since 2017, Netflix has released 340 foreign language original titles in these countries. So they're not just pushing American, they're not just pushing English-based content. They're actually going to these countries, figuring out what people want to watch, and using local actors from those countries and producing content in those languages. So there's a huge, I have a Netflix subscription myself, and if you really look around there, you've got stuff from Korea, you've got stuff from China, Africa, Latin America, titles in Spanish, Italian, Filipino, Mandarin. There's just so much content. But if you're just like looking for English-based titles, you're just going to focus on that saturation. But look at the growth in terms of the international markets. So now it says, in late 2018, Guggenheim Partners analyst Michael Morris made the case that the company's customer base would more than double by 2023. And then in mid-2019, last year, Netflix introduced a less expensive mobile-only plan for customers in India. And apparently the customers in India have been buying up that thing like crazy. So it says, in 2018, ARK Invest went further, making a case that Netflix could triple its subscriber base of 400 million by 2023. So this is some crazy, crazy growth that is ahead here. And I don't think it's too late if you haven't gotten on Netflix. Obviously, you missed a big portion of the run-up. But let's actually take a look. Let's look a little bit closer into kind of the market cap and the things like that. Because remember now, Alphabet just hit $1 trillion. So you've got Microsoft, you've got Apple, you've got Google. Those companies are over $1 trillion market cap. And Netflix is only 148 billion. Now, obviously, those companies are much, much, much larger. But Netflix has the potential to grow into one of those $1 trillion companies. The amount of eyeballs and the amount of time that people use watching Netflix is just massive. And I'm a Netflix subscriber myself. In fact, I subscribed to the service way before I bought the stock. I was buying too much into the North American growth numbers, and when I started reading the international numbers, it just blew my mind how many people out there are going to enjoy a Netflix subscription in this next decade. So, what do we do about earnings? Well, earnings is definitely going to be very, very important on the price action. There's been a lot of activity. I was reading some articles. They said there was a lot of activity in the $380 calls. So that does mean that a lot of traders are buying options and they think that Netflix will impress with their quarterly numbers. So there's a couple things that you can do. For me, I'm going to obviously hold my shares, but I'm going to be potentially using a strangle options strategy. So what that is you simply buy a call and a put option at the same strike price. So I noticed that I was reading there was a lot of activity around $380, and that seems like where Netflix stock was earlier last year. So you know, if they impress with the numbers, I wouldn't be surprised to see at least a 5 to 10% run up. So we could be approaching $380 within the next couple of weeks. I think if you bought maybe some call options, if you wanted to use a strategy, if you wanted to buy some call options, you use a strangle. So perhaps you use like the $370, $380 strike price and maybe buy them like a couple weeks in advance. And you can just buy a put and a call. That way you're kind of making money depending on which way the stock moves. Obviously, if the stock moves up a lot, you're going to do well on those calls, and those puts will end worthless. If the stock moves down, those calls will be worthless. Those puts will be well in the money. Now, obviously, that's a very expensive strategy because those put options are quite pricey. But what I think is that I think Netflix impresses. I think that this was a very, very strong holiday season for Netflix. I do worry a bit about the Disney numbers, but I'm just not sold that so many people are going to be switching from Netflix to Disney. This is, again, something that you do when it comes to like a magazine type thing. You can have many subscriptions at one time. Me personally, I have many different digital subscriptions. I've got a Netflix subscription. I've got Amazon. So, you know, usually when one person will buy one thing, it's common for them to keep buying it. I think there's very few people out here that are just going to have, like, for instance, maybe just one Apple subscription, unless they're an Apple fanboy. But that's a kind of a whole different story here. So, me personally, I think that we're definitely going to fill this this gap right here. For me, this looks like definitely a channel pattern. So if you can simply say that we had lots of distribution here, and then we had the rundown, and then now we had an accumulation period where people realized that the stock was grossly undervalued, and now we're running back up again. But I think, you know, that previous high was almost 6-7 months ago. So the company has so many more subscribers than 6 or 7 months ago, yet it's much cheaper. So, you know, guys, you know, past history is very, very important in my opinion when looking at stocks, because I've looked at a lot of companies over the past 10, 20, 30, 40 years, and good companies usually tend to do good. They're taking care of their customers, and management is returning value to shareholders. So you could do much worse than Netflix stock. So for me, we really just wait to see what earnings. I'll be sure to post something after earnings go, but I would love to see Netflix hit 380 and go beyond and push to 400. I think we can definitely see $400 by the end of the year. So this is really important, because if these numbers are bad, Netflix could go to 300 or below. So this is like a wait and see situation for me. But I just wanted to give you guys a little bit of insight on what's going on with the company, and how maybe in the short term earnings might be a little rough, but long term 2025, 2030, Netflix will surely double those subscriber numbers. And I like that plan in India. I'm going to talk a bit more about that in the next video, because I want to get some more numbers on that. But India is a major, major growth sector for Netflix. There's a lot of people in India, and they don't have the same restrictions that you do in China, where China likes to have kind of their own businesses and their own companies. India is more open to Western influence. They're more open to American corporations. So American corporations don't have to like force themselves into China, whereas India, it's much more open, and it's a former British colony as well, so that makes it a lot easier for them to do business there. So really interesting to see a lot of these growth numbers. I'm really excited to see this Q4 report, to see what's going on there. So let me guys let me know what you think about Netflix stock. You think it's going to go up? Do you think it's going to go down? What do you think are going to happen with earnings? And let me know what you think in the comments, guys. And also, if you guys aren't familiar with Robinhood, you can get a free share of stock for signing up. So make sure you check that out, guys. If you haven't started investing in 2020, now's the time. So just click the link in the description below. You check out the comments below, and you can get that link. You get a free share of stock if you sign up using my link. So that's it for now, guys, and take care.